Alright, so let's go over some more examples, 5-second entries. These two entries is the one that I showcased in the latest video on EURUSD, but I want to show you how to enter on the 5-second also. So we had the setup where price came to retest this area after price breaking down. So dropping down, let's start with 30 seconds. 30 seconds, you see you had a PY here, the last bullish candle before the drop, and you also had this wick here that I would take, but you can just use that one. And then dropping down further, 15 seconds, the PY there, and then we had another unmitigated candle here where price did eventually come because it also had this equal highs here. So price came there and then started dropping. So 5 second, this would have been harder to enter because price just tapped in and then immediately had a reaction, but we can look along the way to get other entries in. So price pushed high and then started to drop, created a change of character here, right, and then created the break of structure below this low also. So let's look for a range. What's the range formed? This one right here. You see the range? Couple of bullish candles before price dropping further down. Price returns into that range, gives the change of character, takes the high, takes the low, and then you can basically, because you have this range, price taps in, you can enter as soon as possible and basically just ride the thing down. In this case, you could have a 2.5 pip stop loss and then go for the target, which I think it was somewhere around this low, or just go for 1 to 5. If I enter on the 5 second, I usually like to go for a 1 to 5 risk reward because you're gonna probably have some losses also when you enter on the 5 second, because you have such a tight stop loss, you can get stopped out. So it's best to just basically aim for a 1 to 5. Here also another re-entry because you have another break of structure down. So you look at the range that created that break of structure, which is this one right there. So you wait for price to tap in again. He taps in here, gives a nice reaction, could have just entered here, have a 2.5 pip stop loss, and then aim for 1 to 5. Price taps in, goes down again, and let's see what happens. Price gives another re-entry, and this one would have been a stop loss, you see? And this is probably a break even. Came right back at the 1 minute again. So this is why I'm saying 5 second can bring a lot of entries in. So in this case, because we got stopped out here, this would have been a break even. You also look at what unmitigated ranges you have left. So you also have this range here, which was basically after this change of character, that was the entry, price came in. You see, the same thing that I said. If your entry point creates a range because it creates a break of structure that can be mitigated, you can either keep the initial stop loss or just reduce it a little bit. In this case, you could just keep the initial stop loss because you'll just get a mitigation. And after price mitigates and starts to go down again, you can basically go break even. So at this point, I will just go break even because price had a reaction from that range, unmitigated range, and there's no reason for it to come back. There's a reason for it to come back here, where you could execute another basically sell. So let's see, that was not a confirmation, and you see price comes, I don't know what's up with all the lines, but basically what happens, price comes here to tap it, doesn't really touch it but anyway, it comes back here, right? Why? Because that range created a new 1 minute change of character, which again created a new range. Price comes in again, gives a change of character. You see, so you can enter here, that would still be valid. I don't think you would have been stopped out, but let's say it creates a new range right here. Why? Because it creates another change of character. So it just needs a lot of practice, to be honest, guys. Entries like this require a lot of patience just because you can get retested a lot of times. So another change of character here, another retest at the range, could enter here again, 2.5 pip stop loss, aim for 1 to 5. Let's see if the trade runs, comes back up again. So again, same thing. Why? Because the 1 minute created a change of character. You see, 1 minute took out the high and then it took out the low. He came right back up again. So you need to look for, basically, if you're in this trade, you have another range being formed. You either keep the initial stop loss or you re-enter again. You re-enter after another change of character. So you have the 1 minute charge here. Then price comes up again. This is the 5 second charge, creates a new range, which is the same basically here. And then you would re-enter here again and aim for that sweet 1 to 5. Let's see. Price comes down again, very nice. At this point, let's see if it hits out. It doesn't hit, that was the 1 minute entry. So let's see what happens. We have the 5 minute break of structure. Price should come back at the 5 minute one. So it's all time frames. If something happens on the 1 minute, then it will happen on 5 minutes, then it will happen on 50 minutes, and so on. So here we created a new 5 minute candle where price should come in. You work time frames down. I showed you the 1 minute entry, which was here. But let's see how you would enter on the 5 second there. You have the 1 minute POI. You look for ranges on the 5 second. So you have a range here. That's valid. And then you have the range here whereas you're basically your 2 entries and the 3rd entry. So you'll have had a stop loss, 1, 2, 3 entries in profit, didn't really hit 1 to 5. So you keep running them, and then price creates that 5 minute, comes back up into this range. You wait for confirmation inside the range. So you wait for that order flow to realign bearish. So let's see, I need to take this low because this low created a high, gets taken out here. So it's valid, and I'm waiting for where I'm looking for a range. What's the range? This one here. So price comes back in. You see that's the same as the 1 minute entry, but you would use a smaller stop loss because you see on the 5 second what can it retest. Have imbalance here that price can wick above, and you have another range here. So price can either react from here or come higher, and then you could just re-enter again on the same stop loss. So same thing happened here. Because you already have the change of character, you don't really need to wait for confirmation, you just enter directly, aim for 1 to 5, and see price started to go really aggressive to the downside. So in this case, you don't really have, you have another range being formed here, but you don't have a break of structure, and then that's TP hit. So using the 5 second, you would have had 1, 2, 3, 4, 5 entries in the span of 1 hour. So 5 entries in the span of 1 hour, totaling to 5, 10, 15, 20 minus 1, 19 R. So yeah, 5 second entries are very, very good to know, to take, if you like this style of trading. For me personally, I don't really like this style of trading for 3 reasons. You take a lot of losses and you need to keep re-entering. You need to use a calculator, so you need to be on the charts all the time. You need to have the charts, you need to have the MetaTrader, you need to have a MetaTrader lot size calculator. And then commissions are very high and lot sizes are very high. So let's say I'm trading a 300k account. I need to do like, with this kind of strategy, I think you can do a like 0.1% risk, which is I think $300. Let me look it up. Yeah, $300. So on a 2.5, I mean, that's not too bad. It's like 10 lots, aiming for 1.2k. But if you want to do higher risk, like 0.25, then that's going to be 1k risk. That's going to be like 40 lots with commission and so on. It's very, very hard to manage. I don't like that. But if you're trading a small account, you're trying to flip it, this is a good way to do that. But you need to stick to the same risk percentage in order to have success with it. And it's all about ranges. Every time you have a break of structure, you create some ranges where price comes in. But you also need to always pay attention to higher time frames, such as the 1 minute, 5 minute, 15 minute. 1 minute here was very bearish, right? We had the objective Asia low. We had the higher time frame bias of coming down there. So I could just basically, instead of these 5 entries, I could just enter based on the 1 minute here, cover the high with like 5 pip stop loss, and then aim for a 1 to 2. And that would have been easier. It's just 2R, but if you use 1% risk, that's basically 2%. Here, if you risk like 0.1, that's still 2%, somewhere around that, but you take 5 entries. So I'd rather go for this. Let the trade play out. If it comes back to retest, it doesn't really bother me. Just have an alert set where I go break even, and then I don't have to deal with all the entry. That's just my personal opinion. So that's why I do recommend trading the way I do, using the minimum 1 minute. I used to trade on the 5 second a lot, but I just found to get into that gambling mentality very fast. Started losing a lot of challenges because I was just non-stop trading the 5 second. You keep getting lost into it because you watch the 5 second time frame so much, you tend to lose yourself into it, and then you're not paying attention to 1 minute, 5 minute, 15 minute anymore, 1 hour, 4 hour. You're not even paying attention to the 4 hour. You're just watching the 5 second, thinking price is ready to go in your direction, and it just makes you, I don't know, over trade, over risk, and then start blowing accounts. But however, I do use 5 seconds sometimes when there's London Open, or when I have a potential entry, so I'm looking for a 1 minute entry or 5 minute entry in New York, let's say, and price on EU starts to range a lot, then I like to watch the 5 second to see which ranges are not mitigated, just to get me an idea where price can come back to, and if I can get a better entry. So that's pro, that's something that I use, which is very, very nice. And yeah, that's about it for the seconds entry. Let me guys know if you want to see more videos about it. When I do trade breakdowns, I always go down on the 5 second as well to show you how you could have entered. And yeah, it's not big of a deal. Next video, we're gonna put everything together and do some more breakdowns, full on breakdowns that I trade. And then we're gonna go into the last chapter where we are basically gonna talk more about the trading plan, back testing and forward testing, and the favorite thing, funding companies and how to approach them, and how easy it is to actually become a profitable trader. You see, it's not that hard once you understand how the market moves and you have patience, you exercise discipline, trading really becomes very easy.